Okay, I want to address another piece of news because we are still in the thick of earnings season. Irfan Razack, who's Chairman and Managing Director of Prestige Estates, joins in to talk about their numbers. Mr. Razack, it's great to have you on the show. Give us the highlights of the performance for Q4. I particularly want to know what was the rental income like and the total collections in the quarter.
The sales for the quarter have been very good. I think we've done 1,240 crores plus, which is a substantial increase over the previous quarter, and we are pretty pleased at how the company has performed on its sales. As far as rental for the year 18, I think we've closed it around 620 crores. And as we go along in FY19, we'll have exit rentals of about 800 plus crores. And the collection for the quarter has been as robust. It's been the steady 1,000 crores. So all in all, it has been a good quarter for us, and it's been a strong quarter. And we've had several launches also during the quarter, which has boosted up the sales figures.
Have you seen in terms of pricing as of now, could you give us a sense of residential versus commercial? I believe residential, the trend has been more optimistic.
No, there is no such thing as residential versus commercial, because residential is a separate asset class by itself and it has its own steam, and it operates depending on the type of launch, the type of product that is available and the pricing that is done for the product. As far as commercial is concerned, I'm happy to say that it's pretty steady, leasing is pretty robust, there are hardly any vacancies, and whatever we are building is getting leased out at fairly decent or maybe at rentals much more than what we expect. So all in all, it's for commercial also, it's a very positive note. Having said that, even during the quarter, we opened two of our prestigious hotels. One is the Conrad in Bangalore in CBD, and another is the Sheraton Grand and Prestige Shantiniketan in the Whitefield. We are on the verge of opening one more mall in Bengaluru. We also inaugurated our city center mall in Mysuru, which is doing pretty well, and it's the occupancy is near 100%. So all in all, the different asset classes are doing well, they are performing well. That's giving the boost to the company, and I think each team has been working hard, and kudos to the team that has brought in these results.
No, definitely. I would also want to understand from you how you're looking at, building in your costs. What is the outlook that you can offer in terms of margin traction? I believe your margins also for the quarter have been hovering around 19-20 odd %. Can you better these?
Yeah, see, now margin is something that what happens is when a new project gets recognized, when we do a launch, we always start at a lower number, and as we go along maturing into the project, the price hardens up and keeps going up and up as we go along. So when we recognize a project, now this quarter we've recognized two new projects. One is an office, one is a residential project, and as far as the residential project is concerned, it's the first time it's been recognized, so the margins are slightly lower because the initial launch price will always be lower. But then as we go along and start recognizing more and more revenue on this project, because the fresh sales are coming at a much higher number, that will add up to the EBITDA margins, and I mean that's a positive note. And I believe it's better to start at a lower number and go higher rather than go at some crazy number and then bring it down. It doesn't give any confidence to the market.
Indeed. What about the upcoming projects? Give us some color on how after 5 projects were launched in Q4, are you looking at a strong second half of FY19 in terms of revenue recognition?
Yeah, revenue that has been recognized in FY18 itself has been pretty strong. We've done a total of 5,500 plus crores for FY18 in the full year, and we've done 1800 crores for the quarter alone. Revenue recognition again is a function of the 25% completion. But having said all that, even we have a very strong launch pipeline for this financial year. Now, since RERA is in place and we are got the entire system in place, in the sense that we need to get all the approvals and then only can we launch. So that gap that was there to get all the approvals within the period, that gap has been reduced, and I think the team is working hard to see that every single paper comes in before we log in for RERA and then launch the project. So that cycle is getting shortened, and I do hope that we'll have a lot more new offerings for our clients across the geographies that we worked in. Even during the quarter, we've also tied up a property in Mumbai for development, and we are quite excited about it, and hopefully once we get the formal agreements get done and the approvals come in, we'll do a good launch in Mumbai. We're also looking at doing a launch in Noida. We've signed an MOU for Noida. Apart from that, we are working on a very large project in Bengaluru. I can't give you its name at the moment, but that will be a big number mover, and that probably will come in not this quarter but the following quarter.
Okay. Finally, analyst estimates are quite bullish regarding the expansion in the commercial portfolio for your business. Some analysts believe that commercial assets portfolio can reach up to 23 million square feet by 2022. Do you think that's achievable, and are you track to make those numbers?
Yes, very much more achievable, and because we have the land, we are working on some are under approval, some are already approved, some are under construction, and with the robust leasing that happens and the demand that continues, I believe that number is very achievable. And more so, the number of players in the commercial space are much lesser than what you have in the residential space. So both the malls as well as the office, if we do it right, if you bring in quality, I think there is no looking back. The demand will go unabated.
Thanks very much, Mr. Razack, for joining us and giving us those details. We wish you the very best for the future.
Thank you.